Good afternoon, everybody. It's a weekend. I don't want to waste everybody's time, so I'm going to keep it short. I'm going to keep it concise, and I'm going to make sure that you guys take away something. I'm not here to sell anything, right? I'm just here to educate and to make sure that you guys will be able to take advantage of having a dividend portfolio of stocks yourself, okay? So just some disclaimer. Whatever that I say, right, is a personal opinion. What I say is good doesn't mean buy. What I say is bad doesn't mean sell. Okay. Okay. So a little bit of myself. I'm currently the youngest dealing manager who is handling two trading and investment teams in Phillip Securities. I'm triple major in Western Australia University, and I usually give a lot of talks, a lot of seminars. I go on radio, CNA, so on and so forth, and I usually go down to the schools as well. So my recent one was I was on CNA, where I was talking about the macro outlook for 2017, and Straits Times, where I was talking about the banks. And if you see the top right-hand corner, I'm one of the speakers for Invest Fair. The guy on the left corner, I don't think y'all can see, but y'all know who is Mr. Gupta? Okay, very good. Okay, y'all know your people, Mr. Gupta, DBS CEO. Okay, so we were all speaking at the same event. Okay, so today, I'm going to talk a bit about Macro Outlook 2017 for those people who did not attend this morning. I'll give you a short recap on what I think are the trends that you guys should take advantage of, because my investment methodology is usually a top-down approach. So I need to catch on what is the macro trends for the year. Okay, I'll be talking about interest rates. I'll talk a little bit about dividends and how do you build your own portfolio. Okay, so just a show of hands, right? How many of y'all, y'all are new to this, meaning that y'all have just started trading and investing for the past 1 year? Raise up your hand. Okay, so there are some new people. Okay, 2 years? 3. Wow, so some of y'all 20, 30 years, y'all should be the one speaking up here. Okay, just to make it interesting, I'm going to start asking some questions. Okay. What do you think, if there were 4 trends this year, what do you think would be the 4 trends is? If I will probably start arrowing somebody. If not, I will just target the people who are always sitting at the back. Sorry? Did somebody say something? What are the main 4 macro trends for this year? When I talk about macro trends, right, meaning that when you open a newspaper, right, these are usually the first few things that you'll hear, you'll read about. Okay, I'll arrow one. You want to venture a guess? Okay, not really, but close. Close? Yourself? Okay. Oh, how about you? Yeah. Okay, very good. Oil. One of the main macro trend right this year is oil. Recently, they have an OPEC meeting, or rather, they're going to have an OPEC meeting in Vienna, but the consensus among oil producers, right, between like Saudi Arabia, so on and so forth, is that they're going to extend the limit to cut oil production. And supply demand, right, if let's say that there are more demand for oil prices will increase. If let's say there's more supply, oil prices will drop or increase. Okay, very good. And what is the reason why there's so oil price now is high or low? Okay, why is it low? By who? Okay, why US? For those people who do not know, US have recently created this new technology to produce more oil. So it's called fracking. Okay, so shale oil producers, right, can able to produce more oil in the same plot of land. So that's the reason why there's an oversupply. And OPEC is now trying to fight back, right, by also being able to, because everybody also need to earn money, right? They're trying to get back the market share to help them to earn, basically for the country to prosper. Okay, very good. So oil price was one. Okay. The lady over there? What's another macro trend? Meaning that when you open a newspaper, that's one thing that you'll see about most of the time. Yes? Okay, very good. More specifically, interest rates, right? Interest rates, that's going to be a hot topic which I'm going to touch on later. Okay. Come on, there are 2 more. Anybody want to shout out the answer? Sorry? War. Okay. War is not a macro trend, but it's a minor trend, meaning that there are companies, right, which you can take advantage of such trend. For example, just to show of hands, how many of y'all trade US stocks here or invest in US stocks? Can I have a show of hands? If not, I have to give Singapore examples. Oh, so all of y'all trade Singapore stocks only. Okay, let me ask the question again. How many of y'all trade or invest in US stocks? Raise up your hands. Or options or whatever. Wow, okay. So it means that I still need to use Singapore, more on Singapore counters. Okay, but US will be an interesting market to look at. Okay, so for war, for example, recently there's a lot of disputes with the South China Sea. There are a lot in regards to North Korea, so on and so forth. What companies do you think will benefit from such a trend? Defense stocks, right? So I'll ask all of y'all today, this is a macro trend that is very real, or a minor trend that is very real. And you know that defense stocks are probably going to do well. What are the stocks to look at? That's the reason why you come to seminars, right? So that you will learn, you're able to see and take advantage of my knowledge on how can I help you to be able to be a better investor and a better steward of wealth. Okay? So there are some companies, you think about Air Force, who builds F-16s? Okay, ST, very good. ST Engineering is one, but that's Singapore, right? We're talking about, let's say if it's a world war, which companies will benefit the most? Don't tell me Tony Stark Industries, huh? No such company. Okay, but there was a company that was born, or rather, sorry, not born. There was a company, right, that gave Marvel the idea. Right, it's called Lockheed Martin. Don't know whether you heard of such company. Hey, again, when I give such company, doesn't mean you'll go and buy straight away. Lockheed Martin, they are the producers of your F-16s. Okay, and now they are the producer of the most expensive and most advanced fighter jet, F-35. Okay, so these are some of the companies that, it's interesting, and that's how you take advantage of the trend. Okay, who said this statement? I'll make America great again. Very good, okay. So this guy is one of the main macro trends for this year. What he says, what he do, what he tweets. You don't believe me? You go and see the things that he tweets, right, about certain companies, certain industries, right? Share price sure move one. That's how US work. Okay? So they base everything on social media, just kidding. But because he's a president, he can influence policies and do a lot of certain things. So the most recent policy that he's doing now, right, is corporate tax cuts, right? Okay, when they cut corporate tax, right, is that good for companies or bad for companies? Very good, it's good for companies. Okay, so oil, this is oil, not bak kut teh. Okay, interest rates. And last one, fluctuating currencies. Okay, so these are the four main macro trends, right, that's going to determine, you're going to see a lot of these kind of patterns come out a lot during this year. Okay, interest rates. So they have already risen, the US Feds have already risen one interest rates. Now currently, right, there's 100% probability of a hike happening next month. Okay, you can see the 100% there, the 100% there. And Janet Yellen said that he's going to hike 3 times. Okay, so one already happened. The another one, the people are thinking that it's June. Okay, the next one, right, is the one that is probably quite interesting, is that when is it going to happen? Okay, so the question for you all today, so the topic today is dividends, right, my favorite. Okay, when interest rate increase, right, dividend will increase or decrease? Okay, the person who said drop. Okay, don't want to single you out. Okay, so who say drop? Raise up your hand. Okay, who say will increase? Who is too tired to raise up their hands? And I'm talking to myself. Okay, no lah. Okay, correct. It depends. Oops. Firstly, right, if they have a lot of debt, right, when interest rate increase, right, they're going to pay off more interest expenses. This will affect their profit, which will affect their payout, and which in turn affect clients, the dividend per unit, which affects your return. Okay? Some reasons for the drop, right, why there will be a drop of dividend is that the refinancing of loans. Because interest rates is going to increase, right, if the loan expires or going to expire and they're going to refinance it next year or next 3 years, right, the interest they're going to pay is much higher. Okay? And for those people who knows valuation models, financial models, right, it will affect the valuation of the company also. However, why there's a reason that dividends will increase? Because it's a generally a healthy outlook in regards to the economy, right? And the increase rate is gradual. So companies are usually prepared. Most REITs, right, if you are a very good REIT manager, which I would think that most of the REIT managers are, unless you are certain, okay, no, I don't want to name names, okay? That better not. But of course, if you guys want to know more about what I think of certain counters, right, you can ask me later, or you can just approach me, okay? And lastly, rates are still considerably low, okay? So that's the reason why there's a possibility that dividends will still increase. And there are dividends that are still increasing from some companies. This is the central bank calendar, right? You probably won't find this anywhere because I did this myself. These are all the dates for all the central bank meetings, right? So the main one are usually in ECB, FOMC, BOJ, because those are usually the ones that affect the whole, affect the whole economy. For Singapore, it's usually FOMC and BOJ. Okay, so some facts for those people who are new to this. What are dividends? Dividends are basically company, right, who are distributing a part of their earnings back to the shareholders. Why do companies do that? Basically, they might be to attract you to invest, to buy their share. They might be because, if, for example, REITs, right, must obey corporate laws, right, to pay out 90% of their net income out to shareholders. That's the reason why so many Singaporeans, right, I think some of y'all who buy a lot of REITs, right, why y'all like REITs is because the dividend payout, right, is every quarter. Most of them usually give out every quarter, unless you are maybe like iREIT Global or maybe 3GCC. This one usually give only 2 times a year, okay? Because there are some laws to that. And third is because there's a mature company with no avenue to utilize funds. Okay, who is the most, so give you an example of this, what I mean by mature company. Who is the most brilliant investor in the world today? Not me, okay. Yeah, it's Warren Buffett. Okay, and what's his situation now, right, is that he is holding on to a lot of money, a lot of cash, okay, like maybe 90 to 100 billion. And recently he has an AGM. If you all want to hear and nothing better to do, you can go and listen to their AGM, which is quite insightful. It's about 5 hours, okay, more than this. So, I mean, you guys have better things to do, Okay, so basically, right, I listened to the whole AGM. He has said that he's now finding, or rather the summary is that he has issues using up this cash. 钱太多了，怎么办? You know, I wish I can say something like that. Okay, but too much money. I cannot find cheap valuation companies for me to look at. Okay, I mean, to his standard, there are to some people's standard like mine, which is probably lower than his, but he finds it hard to find companies, right, to invest now. Okay, so he has a lot of cash, and he recently said that he might issue out dividends, which is the first time for Berkshire Hathaway, his company. Why? It's because, right, he only believes in reinvesting dividends so that you can compound the return. That's why he's so successful. Okay? So, where does all this dividend come from? Dividend has to come from somewhere, one. They either come from the profit or from, usually comes from profit. Okay? And profit usually derives from sales. So, when the dividend is being issued out, they can either give it to you in cash or you can get it in shares. Or when they have the profit, right, they may return, the company may not even issue out dividend, right, to keep the money, right, to grow the company. So Berkshire Hathaway is a good example. They don't give out dividend, but you see the capital return for that stock, right, is very impressive. Okay? Easily beat STI. So, example, okay, when next, I tell you, every day I have at least 5 clients who call me. I handle 28,000 clients. I have 5 clients, right, confirm will call me and say, hey, this company, when is the X date? I always get that question, man. You can call your broker, of course. You can call your broker to ask that question. But actually, most of the answers you can actually get from SGX website. Okay? The main thing that I'll usually take note of, right, is the declared dividend. How much? And the X date. Because X date, right, that's usually when the price will drop. Why price will drop? Because 钱已经走了. Okay, the company has already issued out money to the shareholders. That's the reason why share price will drop. And then if a company has a share investment plan, okay, they will show at the bottom issue/reinvestment price, 14.81. This was DBS. This was my reinvestment price at that time for DBS. DBS now what price? Okay, it's about 20 plus already. So did I earn or not earn? Okay, I'll show you my portfolio later so that you guys can take a look also on how do you own self build your own dividend portfolio, okay? So that you guys take away something. Okay, so to calculate dividend yield, I won't bore you with the formula. It's basically the dividend per share over your price per share. That will give you the total dividend yield, okay? But always remember, it's always historic, okay? It will not always be indicative. For example, right, recently some of the telcos dropped their dividend, okay? And the dividend percentage yield changed. So, main thing, how do you start building? There are so many companies, Singapore especially. And the beauty about Singapore, right, is that the dividends are not taxed. If you invest in US companies, right, the withholding tax will be 30%. So if you are more of a dividend player, investor, right, you wouldn't want to look at something more, you wouldn't want to look at the US side as much. So I understand why some of you all may not find that attractive. Because US side is more on capital gain. But for dividends, right, Singapore is still quite attractive. Okay, so what do you do? For some of y'all, if let's say you want to build your own dividend portfolio, first, you need to screen. Those people who do fundamental analysis, right, you need to screen. You need to look at certain numbers on why, or rather, when you screen, right, you need to input some numbers. The main question, right, for dividend yield, right, is that what number will you put? Okay. Y'all entertain me, If I say a number, tell me, will you be satisfied with this dividend? Okay? 1%. Okay. No, Hey, why? Got some companies give 1%, you know? And I'm sure you are the shareholder of the company also. 2%. 3. 4. Okay, 4 is not bad, So 4 is not bad. 5. Okay, 5. Okay, I see one. 6. 6. 7. 8. 10. Well, you can find one strong company that give me 10% dividend yield. You tell me which company also. It's hard. I mean, it's possible. There are some companies, right, which if you do screen, right, there is a very high percentage in regards to dividend yield. But the main question that you need to ask yourself is this: dividends has to be issued out with something, with cash, right? If the company is negative cash flow, earning negative net profit, then still giving you a 20% dividend yield, you think you'll still touch this kind of company or not? You wouldn't, right? You wouldn't. But there's actually a lot of investors did. Okay? And that's why there are these kind of things you need to know. Like, where does the money come from? There are some companies who actually borrow money to pay dividends. Okay? And that's also quite dangerous, lah. Okay. So, why 4%? Why do I put 4%? Anybody want to venture a guess? My personal preference, right, I usually put 4. Okay, I'm not greedy one. I don't need 6, 8. Okay? I mean, more is good, lah. I have some stocks that's about 8, lah. I think some is already 9 already because of the price that I bought was cheap. But why I put 4 as my first screen? Sorry? Okay, very good. Because of inflation. Higher inflation, right, will eat up your dividend returns. And that's why this number matter. If not, you screen the number, right, there has to be a reason why you put the number, right? You cannot just put the number, a super high number, then search like that. There has to be a rationale, a thought process, a strategy on why you put certain numbers when you do your own fundamental analysis and your screen. Okay? So, I usually put 4. Why? Because Singapore bond yield now, on average, is about 2% plus. And this is your risk-free rate, meaning that you buy Singapore government bonds, I mean, Singapore I don't think will collapse, I think, okay? They are giving you about 2%, okay? Inflation now is about 2% also, about 2% plus, and it's increasing, right? At the whole of last year and 2 years ago, right, the inflation was in the negative region, and that would have been attractive for a lot of dividend play, because that will boost up your return. Okay, so I usually look at 4. And what do I look out for when I look at my fundamental analysis in regards to the company? I need to look at the business model. It's not easy. I'm not trying to give you an easy way out, like saying, wow, your stock, if you follow my methodology, you confirm can grow 1,200% return one. I'm not that kind. I'm rational and objective. And I am here to tell you, right, that there are some methods. This is my method that I think that is best, that I think that has benefited me, or rather, sorry, I know that it has benefited me because I don't need to look at the market every day, although it's my job lah. But I know that if I close my eyes now, right, my stocks usually no problem one. But now very easy to say lah because STI already so high already. If you all want me to comment about that, you can ask the question later. Okay, so what do I always look at for companies in business model? I need to understand the business. What's the outlook? Whether is there a threat over new entries or whatever. So recently, Singtel, M1, StarHub, did they face a new threat? They did, right? TPG Telco, right? Australia Telecom. And this will affect a lot of the telco stocks, which, if you realize, right, ever since that was confirmed, right, a lot of the stocks for M1, StarHub especially, right, has been dropping. Why specifically M1 and StarHub? Okay, smaller cap, maybe, but is that the only reason? Why particularly M1 and StarHub? More than Singtel? Because Singtel got Temasek, is it? No, it's not true. Very good, okay? Because the business is, a lot of them, it comes from local. M1, most of the revenue, right, comes from mobile. So M1 will get hit the most, okay? If you're talking about Singtel, they at least still have the Australia Optus business. Okay, and they have broadband, which is like Mail TV, but StarHub also has. So that's why Singtel is usually a little bit more resilient in comparison to the other business. So you need to ask whether or not the company earnings, right, is recurring. Okay, let me give you an example what I mean by recurring or predictable. Let me think. Okay, Sheng Siong. Do you think that the business is predictable or recurring? Or both? You all know what Sheng Siong, right? You know, the supermarket. Okay? It's probably a bit of both. It's predictable and recurring. Why? It's because you need to use their services. Unless suddenly Sheng Siong don't have, they have some outbreak or something, then you all don't want to shop at Sheng Siong anymore. You want to shop at Cold Storage or Giant, which is owned by, very good, Dairy Farm. Okay? So we want, when you're paying about dividends, right, especially on a consistent basis, because dividends is passive income, you want to find a business model, right, that's recurring. A good example, right, is your REITs. Why is the business model recurring? Because rental, they earn from tenants who pay rent, right, and that will make their business recurring. But it's not always predictable. Why is it not always predictable? It's because that some tenants, right, may choose other, for example, if you're industry, you own industry REITs, which recently has been doing well, right? There's so many options. Ascenders, Mapletree Industrial, Viva, Soybuild, so many. Which one you choose, right? If you're a tenant, you want to go for the cheaper one, or the one that fits your profile, okay? And how strong is the company? Take on a lot of debt or not? The company has a lot of debt or not? In most of the REIT space, right, there's a cap on how much you can gear up to, about 45%. Okay? If you are a REIT that has geared up to 45%, right, there's a lesser chance for you to grow the business. But if your debt gearing, right, is low, there's a higher chance that you may do more acquisition. And that's the reason why I bought this REIT in comparison to others, which I'll show you all later also. Okay? So these are some ratios that I look at. Okay, I don't want to touch on fundamental analysis too much because that's not my topic today. But this is what I do to go through, to choose the stocks that I got today. Okay, and this is some. I tell you, you give me a 3-day course, I also can talk for the FA, like nobody business or value investing. But I just wanted to tell you all, right, that these are some things that I look at. The profitability, net income margin, whether is it high or whether is it low. If it's low, is there a reason? If it's high, is there a reason? Financial health, current ratio. Can I pay off my short-term debt? And current ratio, right, has been a lifesaver for me. Okay? In regards to timing, people say that fundamental analysis cannot time entry and exit of stock price. It's not true. It is possible. There's a stock, which I of course won't name it, that the current ratio was in negative. And they have issues, not negative, was low. They had issues paying off the year debt. But I like the stock fundamentally. Okay? It's a strong business model and I wanted to get the stock. But I knew that the only thing that did not sit right with me was the current ratio, was that it was a bit too low to my liking, right? Anything usually more than 1 is usually healthy. Anything less than 1, I'll usually be a bit more cautious. So this was a little bit low. So when your company, right, has not enough money, what do? You borrow. Is that the only thing you can do? Sorry? As in you sell off assets. Yeah, okay. Yeah, you can sell off assets. But if you sell off assets, it's not good for the shareholder also, right? So that's the bad thing. But what as a company, right, that you do that you benefit the company and the shareholder. And this is a very good company. So if it's a very good company, they will not sell off the assets. There's no need to, unless you're going bankrupt. What else will you do? Sorry? Very good. Rights issue. Okay? What is rights issue? Basically, the company, right, is telling you guys, hey, subscribe to my rights. You can exercise it at this certain price and hopefully that you'll do better. Okay? And that right issue, right, will usually cause the share price to drop depending on what's the amount. So, and it's not true that only small cap companies issue out rights. What's a big bank that issue out rights within the last 3 years? Very good, OCBC. I hope you all subscribe. You will have been very good. So that helped me time. Because after I bought it, if I'm not wrong, I only look at it right after the rights issue. So I could have timed the market. Consistent dividend payout history. Singapore, right, is a little bit harder to find companies that usually pay out dividends. Usually your big cap, yes. But what I usually like, right, the most is they pay out dividend consistently, even through a crisis, and increasing. The increasing part is harder to find in Singapore, but it's easier to find in US. And that's the reason why I usually like to look at some US stocks. Take, for example, US has this US, this I think it's a top 50 index that of dividends that consistently issue out, even through a crisis, 2008, so on and so forth. And I personally own one share called Disney. Okay? Hey, why y'all laugh? Hey, I cannot like Disney princesses, man. It's a very good, okay, or rather, why I bought Disney, right, was that I love the business model. If you have children, if you have grandchildren, right, you'll realize that they're everywhere. Don't even talk about them, talk about yourself. What do they own? They own Marvel. They own Disney princesses. They own Disneyland. And that's not even where the cash flow is coming from. They own ESPN. And that's the main cash cow. And more recently, the latest acquisition a long time ago was Lucasfilm. What did Lucasfilm created? Star Wars. When I buy a certain company, right, I'm not just buying the assets. I want to buy the ability, right, to get money from you. I'm buying a piece of your possible income. And I think that why I invested in Disney at that point of time, right, apart from the business model was sound, right, was because the dividend, right, kept increasing every year, even through a recession, right? And that gave me the guts to put in a little bit, okay? And the funny thing about Disney, right, was that I bought it for my wife also, as my proposal gift. One of my proposal gift. Don't say I very cheapo, like I never buy wedding ring. Or, hey, Disney shares not cheap, you know. It was more expensive than a wedding ring. Okay? So I bought it because she did not have any investments. But I bought it because she loved Disney princesses. She loved to watch movies also. So that was it. So some ideas for the guys, but y'all don't just buy the stock, must buy wedding ring also, very important. Okay, last thing, diversification. Y'all must know how to diversify, right? And the reason why we all need to be diversify in regards to the different industries on where you take your dividend from, right, is because, okay, the greatest investor in this world, Warren Buffett, said that if you do not know how to, if you diversify, right, means you do not know the actual business that you are investing or whatever, paraphrasing. The reason why I diversify, right, is because I touch my heart and I say, I'm not as good as Warren Buffett. And I don't think any of y'all are. Because if y'all are, right, y'all should be standing on this stage or even beating him in regards to his investments. But we need to be honest with ourselves. It's because we are not as proficient in regards to stock picks. That's the reason why most retail investors, right, sometimes are even better off investing in the index rather than stock picking. Why? It's because, right, we are not that proficient in stock picking. That's the reason why we need to diversify. Because we need to know, we cannot, or rather, we do not be able to preempt a lot of different risks, threats, and failures. Okay, y'all want to see my portfolio? Okay, I'll show y'all. This is an example, but I have half. I have half of the stocks here. Okay, some of y'all cannot see, but I'll just read it out to you. Okay, first one, DBS, Singtel, ISO, SSG, F-REIT, MIT, KDC REIT, SETS, and Keppel Corp. So some of these stocks I hold for years. Thankfully, by the grace of God, that has been doing quite okay. And the reason why I'm showing this, right, is not to tell you, 我很厉害. I'm merely applying, right, whatever I shared with y'all. Of course, there's a bit more because I only got half an hour, so I can't really talk so much. But I'm saying that it's possible. Okay? And I'm not here to tell you 1,000% return one. I'm here to just tell you that you can get income passively, right, in a very rational, objective, and real manner. Real manner. So, this is the 10 stocks I picked. STI got how many stocks? 30, very good. Okay, so STI, I back-tested this. STI, if I bought in, let's say I gave an example. If my entry at STI was 3.22, which was the start of 2014, right, I would have only gotten 4K return, including the dividend. 4K for 3.5 years. Okay, I mean it's still not bad still a return. But I'm saying that it can be better. SG Unit Trust, a famous unit trust. Some of y'all may have invested in unit trust, okay, was lesser, did not beat the index. It is very hard for a lot of fund managers, right, to beat indexes. This is the reason why, personally, right, I am better off investing with an ETF, right, than buying a unit trust. But that doesn't mean that all unit trust is not good, It's that you must see which one and what to look at. But what I usually more comfortable with exchange-traded funds, right, is because it's cheap on the fees, right? And it's suitable for me, So S&P 500 ETF, not bad, 17K return, 3 years. It's about 30% plus, like that. I think it's not bad. But the issue as I said, with US ETFs, right, or with US stocks, is that you have to pay 30% withholding tax to the US side. Not to your broker, You call me and beg me to say, hey, can you return me the 30% withholding tax? I also cannot do anything for you. This is charged by the US side. Okay? So actually the return will be lesser. So these 10 stocks, right, that I got, right, will have gotten you a return about 37% plus. Okay? And this is assuming if you did not reinvest the dividend into the company, which some companies manage to give you the option. Okay, let me give you an example. I like talking about these stocks because these are usually the ones that I'm usually more proficient, and I usually like talking about companies that are more fundamentally sound. Okay, let's talk about MIT. Anybody want to know what? So anybody know what stock is that? Very good. Anybody have Maple Tree Industry Trust? Very good, fellow shareholder. Thank you. Okay. Why I chose Maple Tree Industrial Trust, right, in comparison to, for example, Ascendus, for example, right? Who is the bigger player here? Ascendus or Maple Tree Industrial? Ascendus, right? So why did I buy a smaller company? Even though the dividend yield at that point of time where I bought it, right, is about the same. What other factors do you think? Think who? Wow. Okay? Maybe. The main reason why I look at Maple Tree Industrial Trust, right, is the potential. As I said, that's why business model is very important. One ratio that stood out, right, was that the gearing for Maple Tree Industrial was extremely low at that point of time. It was only 28%. In fact, now, right, I think it's about that range still. If you have very little debt, right, what does that mean? You could buy more, right? There's a higher chance that you might acquire more companies. And that's the reason why there's a lot of institutions, right, went into Maple Tree Industrial. If you see, you look back the return in comparison to Ascenders and Maple Tree Industrial, right, they're both very good companies. They're both very good companies. But why Maple Tree Industrial performed higher, right, was because of the potential, right, that it could acquire more company. And that's why the market price in. That's why usually stock market, right, is not today price in one. It's usually price in 6 months forward. 6 months forward on what the analyst, what the market is thinking that's going to happen within these 6 months. And that's the reason why we need to understand the business model. So if you have taken this portfolio, right, your annual dividend gain will have been about 5%. It will be higher if you have reinvested. It will even be higher if you have bought the stocks, right, at a certain price. So the entry for January 2014 for DBS, right, was $17. $17 in comparison to now is still quite high. But my entry was, okay, or rather, the annualized dividend yield, right, is about 3.33%. Then you say, hey, Sky, you joking, is it? You told me that you only look at 4%. Do you think that I bought it at this price? I bought it, right, when my dividend yield, right, was at about 4% plus. Because if you remember the formula, it's dividend per share over the price of the share that you bought. Okay? I waited until DBS went down to about 14, 15. Then I went in. And then, if you ask me now whether I'm still holding some, but I sold off some also. Okay? My most important advice to some of y'all, especially now when the STI is really so high, and some of the stocks are so high, right? If you're on the green, right, and if you want to ride the trend, please continue to ride the trend. But it's not about just the money you earn. It's about the money you get to keep. You have to manage your risk. Okay? Do not, out of greed, just continue to let it run like that. You must, at some point, right, also take some profit, a little bit, here and there. Professionals, right, when we do it, we don't go in all one price one. We will have multiple trenches. We'll go in 1, 2, 3 times, 4 times, 5 times, accumulate along the way. Why? Because honestly, we do not know what's going to happen tomorrow. That's how we do risk management. And that's one thing that I feel that retail investors do not, I feel that you all need to learn, right? Unless you are buying Noble, then okay, good luck. No, just kidding. Noble actually used to be a very good company, but now there's a lot of debt issues which they usually can't restructure. And if, let's say, no bank's willing to lend them money, then we might have an issue. That's why the market is already pricing in that, you consolidated $1 plus, now it's like, 60 cents, 60 plus cents. Okay? So, in summary, manage your expectations. When you set your dividend yield, right, don't set so crazy, go and set until like 7, 8%, even though that there are some REITs, right, even now they're giving at that range. But there has to be a reason why that they are giving the dividend yield at that price and yield so high. Okay? You have to understand the rationale and whether or not the market is pricing in something worse to happen. That's why the dividend yield might be high. Understand the company. Do not buy shares simply because share price drop a lot. Share price very low doesn't mean can mean lower unless you are at $0. Diversify your portfolio because we are not extremely good stock pickers, but we need to be real in regards to understand that we may not expect certain things, and that's the reason why we need to diversify. And lastly, if a company is good, right, always reinvest. Right, always accumulate. A good example is like there are some REITs, right? First REIT was my first stock that I ever bought. Was the first stock that I ever bought, and I've always reinvested ever since. The reason why that I reinvested, right, was because I was very optimistic in regards to the business model, and the price that I got was cheap, and because it's healthcare. right? Indonesian hospitals, right? Fourth biggest, one of the biggest population in the world. You rich, you poor, you still need to use hospital one. Unless you are God lah, then nothing to say lah. But that was the reason why I chose certain companies in comparison to others. And valuation play a factor also, because in Singapore, healthcare there's only a few, right? Raffles Medical, Parkway, First REIT, Singapore Medical Group. Yeah, and got a few more lah, but those are usually small caps. Okay, I'll leave you all with one piece of advice. If you guys need help in regards to your portfolio, right, you can always drop by to any of the branch to open an account and then get a dealer. The amazing thing about Phillip, right, is that every branch has an equity dealer inside. If you don't have, you come and find me, I'll help you go and scold them. They will, what they do is that they can able to advise you. So for people who have accounts under my team, Team Alpha, is that I'll do portfolio reviews for free, meaning that you give me your CDP statement, right? I will actually look through all the stocks and tell you what's going on, what needs to be done, and that kind of thing. Of course, all these things are personal opinion, yeah? Okay? And the reason why I do that is because I really want to help people to really steward their wealth well. Especially, sometimes I feel a bit sad, you know, if like their 70-year-old uncle come and find me and then like the CDP is all in the red, then it's like, wow, you know, must help this person to recover something. Because at the end of the day, right, money, right, is usually used out of good purpose. If you are using it, if you're trying to get more simply for the sake of getting more, right, that's just greed. But don't let the things you own end up owning you. That's my most powerful advice that I'll leave with you all today. Don't let the things you own end up owning you. For example, if you own Noble shares for the last 10 years, right, clearly, and you have not sold at some point of time, I would say that that stock has owned you already. Not you own the shares. Okay? But then again, there's hope lah. Every company there's hope, right? They may deliver, they may recover, but that's yet to be seen. So we need to wait and see before we get more information. Okay? So you can go and find them. This is my team. I handle 2 teams. Some of my guys are also outside, which you can find them as well. Okay? And I would like to conclude the presentation. If you have any Q&A, or okay, if you have any questions, right, you can come and find me. So sorry for taking most of your time, and I hope that you guys will be good stewards of wealth, and anything, just come and find me, okay?